Joining us right now for a closer look at the markets is Ryan Detrick. He is Chief Market Strategist of Carson Group. Ryan, your thoughts this morning as we watch these volatile markets. Would you step in at these points, or is the volatility so much that you're just kind of sitting back and waiting to see how this plays out?
Yeah, good morning, everyone, and thanks for having me back. And Joe, you and Senator Warren agreeing on things. I'm looking forward to watching that a little bit. That'll be something.
I know. It's the antimatter meeting matter. The universe is supposed to end.
Yes.
Don't cross the streams.
Yeah. There's a lot of things going on, right? And I think to answer this question, what do we know, right? What do we know? We know more than 80% of the stocks in the S&P 500 just made a 20-day low. That is consistent with pretty close to major lows. We just saw that big spike up above 50. Once again, you're in the ballpark of lows. But you've had so many good guests talk about things. I think, what can I talk about that no one's really mentioned on the network yet? Here's something for you. Yesterday, the S&P was up 4% at the peak, closed down at least 1%. That's never happened in history, at least using intraday data back to 1978. But taking that one step further, 3 days in a row, the S&P 500 has closed at least 3% off the intraday high. So that's obviously weakness as the day goes on. We get it. 2 times in recent history, we've seen that. July of 2003 and then August of 2015. Both of those times obviously were very volatile, but those were near major lows. And when you look at August of 2015, that was the low, right? We saw that 3 days in a row of weakness off the highs. Up 6% 2 days later. And then you're kind of off to the races. Now, I get it. There's lots of other stuff we can talk about. But I think to answer the question, we're in the ballpark here of hopefully some type of a pretty significant tactical low.
So you are buying at this point? Am I hearing that you're putting your money where your mouth is?
Mm-hmm. No, we're overweight equities, and we have been. Now, I get it. These last 11, 12 days have not been fun.
So you're praying.
So well, I don't know if we're praying. Let's say we're not praying, but I mean, exactly. We're still there. Now, one of the other things that's really fascinating, I know you've got some credit experts coming up later today, so I can't wait to hear those conversations. But when you look at high yield bonds, yes, they've been down a lot over the last week since obviously Liberation Day. But for the year, high-yield bonds are still only down about 3.5%, with the S&P down 15%. I mean, we're still encouraged by the fact that they've hung in there.
The credit market hasn't collapsed, right?
It hasn't collapsed, exactly. And look at credit spreads right now. Of course, they're higher the last 5 days. Yeah. But credit spreads, look at triple B spreads, high yield, all across the spectrum. Still not anywhere near what we were seeing in 22. Now, again, that can change quickly, but those are some little minor positives, I think, and a sea of negativity. And honestly, you look at the 10-year yield. I know you guys talked about that before it came on, up over 450 when we all went to sleep last night, and you wake up and that's off of those highs. Is China dumping? Is it a global liquidity event? I mean, it's maybe a little bit of all those things. I'll tell you this, the yuan, it's not surging, right? I mean, so it's actually lower. So that maybe means China's not just dumping like maybe zero.
Maybe they haven't completely manipulated the currency to this point.
Exactly.
Look, I hear what you're saying, and I think a lot of people would like to hear that message of hope, particularly if they're long. What happens if China responds this morning and says that they are taking extraordinary measures? If it's not raising tariffs, maybe it's targeting American companies that are based there. There's a lot of things they could do to retaliate. If they do anything to ratchet things up, then what?
Yeah, it's probably more of the same what we've been seeing, right? The volatility, maybe late day weakness. Now, like you said, and we've been hearing 70 countries are talking to the White House. Maybe we get some other good news.
You could hear some good news.
You could hear some good news and maybe negates that. And one thing also is really interesting. We're really close to a bear market on a closing basis, as everyone knows, down 20% from the February 19th peak. I went back to World War II, 11 bear markets. If you simply looked at the S&P the day you move into a bear market, so we're not there yet, could happen today. 1 year later, the S&P is up a median of 23%. Only twice were you down a lot a year after you move into a bear market, 73, 74, and then the great financial crisis. So if you don't think we're in another situation like that, and honestly, we don't. We get it. Things are worse than they were. Right. But those are something to think about for those longer-term investors that, a month from now, who knows what's going to happen. But a year from now, we're optimistic. Go ahead, Joe.
Your poor clients still won't be back to even.
Well, it depends where you're invested, I guess, right? I mean, if you blindly look at that.
You know what I mean? If you lose 20 and get back 23, you're not even.
If you start today, you're right. But I mean, we have been over at equities for a while, and I get what you're saying there. But we're also diversified. I mean, I get it. Bonds are
if you start today. If you held at the top and it goes down 20 and then it goes back up 23, you're still You're not even close to hold.
Yeah, but again, well, that's true.
Unless
but
you put
again,
more
I mean,
Unless you buy today. Unless you buy today.
Cost averaging.
and we've been
Yeah.
buying before today, I guess, is what I'm trying to say there. But I hear exactly what you're saying. That's why you're diversified. I
need
mean,
to
look at
buy
gold today.
today.
Gold's up 2% again, right? So there's still some things that
Throw
are helping.
some good money at bad, Brian. Let's go. Let's get going.